Hello traders and welcome to a Gold Rush Daily, whereby we look at the gold daily analysis each and every day. We began this yesterday, so today is the second day. And yesterday we saw gold was very bullish. We saw that bullish sentiment, and we were looking at some levels around this particular point where we had some resistant levels here. And as you can see, gold is still trying to break above. Is still it has still not yet broken above that particular level, right? So let's begin from the daily time frame. So from the daily time frame, we are seeing a very bullish sentiment yesterday. Okay, so from this daily time frame, what we can be able to attest is that we have already seen a break of structure here, right? And looking at it from the daily time frame, in case we see a retracement, then it might come to this particular level where we have the daily order block, right? And also this is where we have the daily lows, okay, the major lows. Some liquidities here. So in the 4 hour time frame, we are going to see again, we can be able to refine that level. And that's how we get our order block. Remember, I use the order block concept, the smart concept, the smart money concept, that is the ICT concepts. And having that, so we might want, or we want to see the price push down to at least at these particular levels for us to be able to eyeball some buying opportunities. But in the meantime, if you look at this kind of price action, what we are seeing here, if you take your Fibonacci, you mark from the lowest point to the highest point. I use the ICT Fibonacci. Then we see the likelihood of the price coming to this level. These are the retracement levels that we are looking at, or the optimal trade levels. So I'll just leave it there and then we go to the daily. So this is now the from the 4 hour time frame. This shows us that the price is likely to come to this particular point. Okay, but let's look at it now from the daily. I mean, from the 1 hour time frame. So from the 1 hour time frame, the first thing that we can be able to see here is the price creating what we call a double top, right? So all the M pattern. So we have seen the price that take out the liquidities there today. So this was the high of yesterday. This is where we have the low of yesterday. So the high of yesterday has been taken out. Okay, so most of the time when we see the highs being taken out, all right. So the smart money usually look for sell setup, and now the anticipation will be the price coming to the lows of yesterday around this particular point. And when again you take your Fibonacci, so we can draw using the 4 Fibonacci, we drew from this to this. So you see how these Fibonacci levels rhyme slightly, how these Fibonacci levels rhyme slightly, how these Fibonacci levels rhymes, I mean, how these Fibonacci levels rhyme very well with these particular liquidity levels that we are talking about at this particular point. Okay, so meaning that we are anticipating maybe the price to come to this level. Again, if you look at the low of yesterday and the high of yesterday, again, you take your Fibonacci from that particular point. So I'm just trying to show you how maybe probably to highball, how far the price or how the likely points that the price is likely to push to. So we see that this level is also a key point of retracement using the Fibonacci. So now when we narrow down to the 30 minutes time frame, so there are two things that I want you to see here. Number one, we see the price breaking above this level. So here we had some resistance at this particular point. Okay, we had some resistance whereby now the price after this resistance here, all right, this resistance here, initially the price was able to gain the momentum to break through, all right? So what we are looking at, the first instance that we want to see is the price coming to these particular points, all right? We want to see the price come to this particular level. So how are we going to eyeball our entry? So with this one, what I'm going to do is I'm going to minimize it like that, right? I'm going to minimize it like that. So mark it like that because what we have seen here, we have already witnessed a change of character right here from the 30 minutes time frame, you have seen that change of character. So what it means is that the price, in case the price comes to this level, that's where we have the OB. So we might see some selling opportunities from these particular points. Okay, so something like that. Right? Something like that. So we might see some selling opportunities there. Again, as you can see, the price has also created another change of character here. So what it means is that we might see the price maybe probably react from these particular points. If now you take again your Fibonacci, right? Because the Fibonacci helps us to identify how far the price can be able to retrace to. So if you draw your Fibonacci well, you realize that now this point, because you are looking at the high point here, and the lowest point where the price has reached so far, maybe in case you're going to have a retracement. So you realize that at this particular point, we don't have, this is not really, it's maybe probably a zero point 0.5 level, but for me, I would want to see the price dig slightly deeper into the zone, so as to be able to minimize the risk. All right. So again, this M pattern or this M pattern, what is showing us is that there is a potential or the likelihood of the prices pushing down from where it had originated. So we see the price. There is a likelihood of the price coming to down to these particular levels, right? So let me just delete this Fibonacci so that you can be able to see those price levels. So there are chances. The first chance is the price coming all the way to this particular point, right? So here we are looking at, in case of this retracement here, we'll be eyeballing some selling opportunities, right? So I want to see the price push down to this particular level. And the moment we have price come to this level, we have a break below this level, then we will be looking at some more bearishness, all right? We'll be looking at some more bearishness from this particular point. The moment we have that breakout, we'll be looking at some more bearishness or some more bearish prices from that particular level, whereby now we'll be anticipating the price again to push down to these particular points here, where we have these structure here. Okay, so remember these the lows of yesterday. So in case now, because you have taken out the buy side liquidity, so now we are looking at the price for us taking the sell side liquidities. So within this, then we see the potentials of price or taking some partials around this particular point, and also now eyeballing the TPs here before the price coming in, and then now we see a potential push on the upper direction. So I'm anticipating to see a retracement to around that 350 levels here before now we start seeing more bullish sentiment. The reason is because when you look at it from the 1 hour 4 hour time frame, we have a lot of imbalances. All right, we have a lot of imbalances. So I anticipate the price to come and rebalance these imbalances that we have there before now we see a continuation of the higher trend. Okay, so but in case the price doesn't do that, in case we see the price push up and break above this particular point, then we will be looking for more buying opportunities. All right, so above this level we will be looking for more buying opportunities above that particular level. Remember, when I mark these, it doesn't mean that this is how exactly the entries will be, but this is just to guide us in terms of what we are looking at. And this might push us to around 35, right? So remember, this is long term, that 500 level. We are looking at it because that's where we have the all-time highs. That's where we have the all-time highs at that 500 levels, around that particular point. That's where we have the all-time highs. So, but again, remember, like I said, when I mark these levels like this, you have to wait for the price to react to these levels before now you start taking entries, because sometimes depending on the strategy that you're using, like for me, I use the order blocks. All right, so I use the order blocks. So in case the price breaks above this level, then I will want to now look at the high probability order block that we have. So I wait for a retracement to the high probability order block, and then now I'll be able to take the trade. So this is just for the purpose of guiding us. So that's what we'll be monitoring today for gold. Let's keep a watch what is likely to happen. If I look at the Forex Factory calendar today, we have the news that are likely to affect gold. Let's maybe probably filter, because I know Powell is speaking and they say that it will not be really impactful, but we anticipate these news to at least because here is going to shed light in terms of whether maybe Fed gonna cut the rate or not. So either hawkish or dovish sentiment, all right? So it will still impact. We'll be able to see some impact for the dollar, for gold at this particular hour, 3:30 p.m. So it's good to watch that. So that's what we have today, not unless now anything else transpires that is not listed in the Forex factory calendar. All right. So with that, guys, have a nice day and see you tomorrow as we review what will have transpired today. So thank you so much. Trade with discipline, trade cautiously, and keep safe.